Our company focus is on Intel and its CEO compensation. Intel is an American multinational corporation that engages in the design, manufacture, and sale of computer products and technologies. It delivers computer networking, data storage, and communications platforms. Intel was founded in 1968, around the same time as the birth of the semiconductor industry, making Intel one of the earliest companies in the field. They were able to gain the first mover advantage, and from this upper hand, Intel has been able to grow dramatically, achieving a market share of 33.9% in the semiconductor industry. The semiconductor industry, ranked the second most competitive industry out of 288, is where companies engage in the design and fabrication of semiconductor devices. These devices will ultimately be used in various parts of electronics, in this case for Intel's computer chips. The industry is worth $412.2 billion and has been a driving force for the US's economic growth, adding significantly to the nation's GDP during a time where other industries are shrinking. As the world continues to shift towards smart technology, it is projected there will be more than 75 billion installed Internet of Things devices worldwide by 2025, creating a greater demand and appeal for the semiconductor industry.
Intel and Advanced Micro Devices, or AMD for short, are the two market share leaders in the production of Central Processing Unit, or CPU chips. Their hardware is placed in all ranges of computer applications, from desktop computers to laptops to gaming hardwares. Intel has long been the vast majority market leader in number of units sold. However, AMD has lately been taking market share using a penetration pricing technique, focusing more on fulfilling the general customer's needs in comparison to Intel, who has historically focused on high yield. Generally, Intel chips are found in higher priced computers such as Apple, Microsoft, and Dell, whereas AMD chips are found in more introductory computers and laptops produced by HP, Lenovo, and Asus. This market approach by Intel has allowed for large dependence by users looking for higher performance in their computers. AMD has recently been producing technology to attempt to reach Intel's computing speeds, such as in May of 2016 when AMD introduced the x86 microprocessor, which bettered their top speeds by 56%, nearing Intel's computing speeds. As the CPU industry progresses forwards, Intel and AMD must compete to improve their technologies through making chips smaller as well as faster, while also reducing costs. This innovation follows Moore's Law, an idea first introduced by Intel co-founder Gordon Moore in 1965 that states the number of transistors that can fit on a given size chip will double every 2 years. However, it is predicted that within the next 7 years this law will become void and a new technological innovation is needed in the CPU market. This means there is a push for product innovation that Intel and AMD are competing to progress first in.
During the 50 years of these companies being competitors, Intel has paved its way into a much larger company compared to AMD because of Intel's focus on producing large amounts of products. However, AMD is slowly gaining momentum due to a new CEO change in late 2014, named Lisa Su, a graduate of MIT, who has focused her efforts on long-term growth and is finally paying off. This can be seen in the change in stock price of AMD, which has grown roughly 500% since she has been in charge. Intel is the much larger company, but has had some hardships in the past. The most notable is the Intel and Spectre meltdown that was damaging Intel chip efficiency and causing memory leaks, which has affected basically every Intel chip since 2011. With that being said, in 2017, Intel reported revenue of $62.8 billion, $17.9 billion in operating income, and a diluted earnings per share of $1.99. And AMD reported revenue of $5.33 billion, an operating income of $204 million, and net income of $43 million, or diluted earnings per share of 4 cents. Now we're going to look at the Tableau analysis of the operating activities of Intel and AMD through charts and graphs overlaid with Python regressions.
In the Tableau section, we first want to look at the industry average sales growth. As you can see, the electro industry is relatively volatile throughout the 17 years that we ran the data for. This can also be further explained by the sales growth for just the year of 2017. As you can see, the three electro companies, Intel, AMD, and Texas Instruments, all have very similar sales growth. Secondly, we want to take a look at the market-to-book equity ratio for the year 2017. As you can see, AMD has a very high MB ratio. This can be explained by them having a number of intangible assets that increase the value of their company and a perception that they are going to continue to take market share from Intel, which is displayed in how they are going to increase the value of their equity. Secondly, we're going to look at the industry average ROA per year. And the electro industry, again, is relatively volatile, as you can see. This can primarily be attributed to the fact that the electro industry and semiconductor industries require very high investment into capital and labor. And this means that as industries like AMD and Intel grow, it requires that they buy new machinery and invest lots of money into research and development, which creates high price and can cause their ROA to fluctuate heavily. This can be shown by the very high difference between Texas Instruments, Intel, and AMD in 2017 in terms of their ROA. As you can see, AMD is the only negative company in the set that we had. And lastly, for the industry dynamics, we're going to look at the total sales by year. As you can see, electro is relatively steadily growing, which indicates that the market is increasing and the demand for chips and semiconductors is increasing over the years up to 2017.
So beyond looking at the industries as a whole, we wanted to take a head-to-head look at both Intel and AMD on a few metrics and determine how both they're comparable and how maybe they determine their CEO compensation. So first, we have this graph of their CEO compensation over time. We see that in around 2002, the companies were compensating about the same, but then Intel's really started to take off, where AMD's started compensating their CEO a little less. And so beyond this trend, we want to know what the companies are compensating by to explain what's going on with those companies. So here we have Intel versus AMD sales. And as you can see, Intel not only has a greater volume of sales, but it's also it's increasing at a greater rate. AMD is kind of flatlining in the past 10 or so years. The figure by the sales chart is the compensation. As you can see, compensation is playing a role with sales because Intel had this pretty strong sales hike from 2010 to 2012, and you can see compensation was increased proportionately. AMD, on the other hand, has kind of had both pretty stagnant compensation and sales growth. Another metric to look at was the actual growth of sales. So we saw the sales level played a strong role, but the rate at which sales is growing is not as big of a factor. We see less of a pattern between sales growth and CEO compensation here. We see even for AMD, they had decreasing sales growth right here, but they started compensating more. Intel, on the other hand, had a few other patterns as well. They had some, again, decreasing sales growth, but also doubled their compensation this year. Now we want to look at the metrics that would prove that Intel and AMD are kind of the same company structurally. We saw they both belong to this electro industry. So we plotted both financial leverage and market cap. Financial leverage is the amount of debt that a company will take on to kind of fund their operations. And we see they both have kind of that increasingly positive trajectory of increasing financial leverage over time. AMD kind of has a higher level than Intel's, but they do have that same slope. Market cap, on the other hand, is the dollar value of all shares outstanding. And again, they kind of are on a different scale, but are comparable in the trajectory across time. Finally, we see that the electro industry as a whole usually has lower leverage. So that means they like to keep a lot of liquid assets and cash on hand, not taking on too much debt. And that's because technology and software companies like to keep money for R&D or potential competitor acquisition, or just being on cutting edge of staying ahead of the research.
Based on the regression, Intel is overcompensating their CEO by $8,231,000 as shown by the graphs. It is difficult to say if the predicted compensation is entirely appropriate given Intel's unique circumstances previously detailed, such as their capture of the majority of the market share. However, the over $8 million error may be overcompensated, as the regression may not be a perfect fit to the data. For this reason, we calculated the upper bound of the 95% confidence interval to reduce uncertainty about the magnitude of the overcompensation error. Because CEO compensation is outside the range of the confidence interval, we suggest that Intel decreases its CEO compensation to meet industry standards but appropriately match their circumstances. We would like to suggest a maximum decrease of $5,869,450 from the current actual compensation to $15,658,250, as that number meets the upper end of the 95% confidence interval. We would like to stress that this is a maximum suggested decrease, as Intel's compensation error is comparable to AMD's error, which is upwards of $9 million. Again, the suggested compensation does not holistically represent the company's unique circumstances, but given the data, we feel it is an appropriate decrease to match the evaluation of the regression.